Let's also listen into the finance minister who's speaking at BANCON.
Shri Kamath, Chairman IBA, Srimati Vijayalakshmi Iyer, CMD Bank of India, and the host of this conference, Shri BP Sharma, Executive Director, Bank of India, chairpersons and managing directors of banks, executive directors, whole-time directors, and other senior bankers from all over the country. Good morning to all of you. I'm delighted to be here at the inaugural of the IBA's 34th Annual Bankers Conference, BANCON 2013. The theme of this conference is Bank of the Future, gearing up to meet the emerging environment. It's a challenging theme, and I'm delighted to notice that there are 8 sub-themes that will be discussed over the next couple of days. I will have some observations on the 8 sub-themes presently. I want to take the first few minutes talking to you about the economic situation. As all of you are aware, between 2004 and 2011, despite some blips in 1 or 2 of those years, India's economy averaged a growth rate of nearly 8.5%. Since then, thanks to the external environment and thanks to domestic reasons, growth has declined in 8 successive quarters, touching a low of 4.4% in the first quarter of 2013-14. A decline in growth has been accompanied by challenges on the fiscal deficit, on the current account deficit, and on inflation. The government has taken a number of steps to arrest the declining trend and meet the 3 challenges that I mentioned just a while ago. And I want to take this opportunity, as I do take every opportunity, to reiterate my commitment, to reiterate government's commitment that we will do whatever it takes to contain the fiscal deficit in the current fiscal to 4.8% of GDP. It is a red line that we can breach only at our peril. We will not breach that red line, and we will contain the fiscal deficit. The second challenge is the current account deficit. Last year, we had an unprecedented $88 billion of a current account deficit. It was a minor miracle that we were able to finance it fully and even add a small amount to our reserves. But it goes without saying that you cannot finance a current account deficit of the order of 88 billion year after year. So beginning this year, we said that through a number of measures, we will contain the current account deficit to $70 billion or below. I maintained that number for several months, and on November 1, I said, I'm now confident we can contain the current account deficit to $60 billion or below. And 2 days ago, I was very happy to see that the governor said the current account deficit will be contained at $56 billion or below. I can assure you that the governor and the government are not in competition with each other. But in this case, I'm going to try to do better and contain the current account deficit at below $56 billion this year. The third and the most difficult challenge is inflation. In 2009, wholesale price inflation was only 1.9%. Today, wholesale price inflation is over 10%. Wholesale price inflation is over 6% and close to 7%. Retail CPI is over 10%, and of that, food inflation is over 12%, and in some items, food inflation runs at a much higher figure. Inflation in India affects people in different ways. We have retail price inflation, which affects virtually everybody, especially with people who have fixed incomes or uncertain incomes. We have wholesale price inflation, which influences a large number of other economic factors in the country, including policy making. And then we have core inflation or manufacturing inflation, which indicates whether manufacturing activity is robust or not. Despite our best efforts, while we were able to contain manufacturing inflation, and in a sense, the sluggishness in manufacturing led to manufacturing inflation being contained rather than any policy instrument. And we were able to contain WPI inflation for most part of this year until the recent spurt. We have not been able to contain CPI-based inflation, mainly because it is driven by food items, especially fruit, vegetables, milk, eggs, meat, and other items. Monetary policy has no impact on food prices. The only way we can contain food inflation is to augment supplies. But supplies are not entirely elastic. Supplies won't rise dramatically in a short period of time. For supplies to rise, you need investment, you need greater production, you need better distribution, you need better logistics, you need better storage, and you need to reach the product to the shelves of stores and shops and malls. So we have a challenge, but we have to take note of the challenge, and we have also to recognize that that challenge brings with it a number of steps that are required, what we would call policy, including monetary policy. But I'm confident that the green shoots that are visible here and there will multiply, and that the economy will revive. There will be an upturn in the second half of this year, and it's quite possible that the estimates made by the Reserve Bank or the Prime Minister's Economic Advisory Council or the government about growth being between 5 and 5.5% will be realized. It would be a pity that a country of our size cannot grow to our potential. It has been repeatedly pointed out that our potential growth rate is over 8%. Given India's savings, which are high, in 2007-8, we touched an all-time high in savings, and since then, and even in the worst year, our savings have been 30% of GDP. Given that savings are well above 30% of GDP, and given the normal incremental capital output ratio, our potential growth rate is well over 8%, and I hope that the measures that we have taken will yield results, and we will get back to the high growth path. Now, in that context, let us look at banking. I was very impressed by some figures put out by McKinsey in its report. This captures in a snapshot the state of banking in the country, the strengths and the weaknesses, and I wish to speak for a few minutes on these. Study has shown that only 21% of women who were surveyed admitted that they had access to banking services. 44% of men admitted they had access to banking services. It means that the majority of the people of India do not have access to banking services. Secondly, given that people live under different circumstances, under different conditions, I think it's fair to say that while a small number has actually entered the 21st century, the bulk of India still remains in conditions of the 20th century, and there is a small number which perhaps continues to live in the 19th century. I do not think there is any country in the world where people span 3 centuries. Banking in India, therefore, has to recognize these hard facts. Banks for whom? Is it for the 1% that McKinsey report classifies as affluent? Is it for the 4% that the McKinsey report classifies as mass affluent? Or is it for the 61% which is classified as mass market, or the 34% which is classified as low income? And if you look at the access of these segments to banking, it's quite obvious that access is denied to those who live in rural areas. Access is restricted to those who live in urban and semi-urban areas. There are still barriers to access even to those who live in metro cities, and it's only a small number which has access to the banking services that we are talking about. I therefore think that the first challenge before the Indian banking industry is to ensure that banking becomes truly universal. Every one of you claims to be doing universal banking. You're not into niche banking. Yes, there are private banks, there are investment banks, there are local area banks, there are banks that serve a small community or a small segment of the customer market. But all of you are universal bankers. But if banking must be truly universal, everyone in India, irrespective of the segment to which he or she belongs, irrespective of where they live, irrespective of the economic conditions, must have access to banking services. So I think in the foreseeable future, our biggest challenge will be how to make banking truly universal, and how to reach the day when every woman and every man in this country, if asked, will say, yes, I have access to banking services. The second point that I wish to make is the quality of our banking, the quality of the products that banks offer. It is true that these segments require different products. All your innovations clearly point in that direction. There are products that are required by the affluent market, There are products that is required by the low-income rural market. Today, it's quite clear to me that most of our time, most of our energy, most of our human resources today are, wittingly or unwittingly, geared to meeting a small number of customers and to devise products that meet the small number of customers. If you take big corporates, they can raise money in many ways. They can raise equity capital in the market. They can raise money from private equity. They can raise deposits. They can issue corporate bonds. They can go abroad and raise money through external commercial borrowing. And they can negotiate with large institutional investors, pension funds, sovereign wealth funds, and get money. It is really the SME owner, the small borrower, and the individual who has no other avenue except the bank. And if the bank denies him or her credit, he or she has no option but to fall back on the money lender. I belong to a constituency that is still largely rural, and I know that for the individual borrower, the small borrower, the shop owner, the homemaker who wants to make an improvement in her home, it is either the bank or the bank denies credit the money lender. There is simply no other source of money. And I would therefore urge that we look at the reality of India. The reality of India, whose people live in 3 centuries. The reality of India, where the majority says that they have no access to banking. The reality of India, where the numbers show that 70% in rural India have access only to 9% of retail credit. The reality of India, where the individual borrower, the small business person, has no access to any source of money except the bank, and absent the bank, the money lender. So my appeal to you is, while we should not turn back on technology and innovation and adopting the best practices all over the world, our banking, at least for the foreseeable future, must focus on the reality of India. I have no doubt in my mind that not only public sector banks, but even private banks will rise to the occasion and ensure that every person in India will say, yes, I have access to banks in India. I want to speak briefly on the sub-themes that you have chosen. I entirely agree that any model that you make would have to be customer-centric. And that SMEs do not form one homogeneous class. SMEs can be broken down into numerous classes, and each one has a different requirement, each one has a different need, and therefore it's important to granulate and look at each class and find out what their needs are. There is, of course, a mass market which remains to be captured. The numbers speak for themselves. Therefore, it is unavoidable that brick and mortar branches would have to be open in large numbers for the next several years. Corporate banking has its own requirements, and I would urge you to address their requirements. The digital channel will certainly make for more efficient banking for corporates and for educated individuals who have access to technology. Banks have to pay greater attention to risk and compliance management, to big data and analytics, and would have to pay attention to gearing up their human capital to meet the needs of banking in the 21st century. You have chosen the right sub-themes, and I would urge you to spend time reflecting on these sub-themes and coming up with conclusions at the end of the conference. Finally, I wish to ask you to reflect on how our banks will change in the future. Today, I'm left with the impression that barring some exceptional innovative measures which each bank takes, most banks are clones of each other. I've said this before. In fact, I'm inclined to think that there's more cloning than differentiating. I'm happy that the governor has spoken about differentiated banking licenses. While talking to people and traveling through the country, I find that there is a need for different kinds of banks. Some years ago, we encouraged local area banks, but that initiative was killed after the first 3 licenses were issued. I think we must go back to the drawing board and look at different models of banking. I'm happy that some of the applicants who have applied for private banking licenses to the Reserve Bank of India, I'm told, have come up with different models of banking. I think we need banks which cater to communities. We need banks which cater to people living in what we would call states where there is a tribal population. We need a different bank to cater to people in the Northeast. We need banks that cater to the urban poor. And their requirements are very different from the requirements of the rural poor. We need banks that cater to mainly farmer families. We need banks that cater to women. I do not know how our established major banks can quickly shift gears to cater to each one of them. Maybe they cannot, and I would accept that. But it's therefore necessary for us to promote banks that cater to these individual segments of our people. I sincerely hope that when new banking licenses are given in January 2014, some licenses at least will go to people who have come up with an innovative and different model of banking addressed to meet the needs of special segments of the people. It would be a pity if the new licenses also go to banks which clone existing banks. I'm confident that that will not happen, and that innovative ideas, innovative banking will gain recognition by the licensing authority. I know that this has been a stressful year. We are trying to alleviate your stress. This stress is reflected in the quality of assets, quality of restructured assets, in your provisioning, in the lower dividends that are being given to shareholders, in the large amounts of money that have to be set aside for provisioning, and in the what appears to be weaker balance sheets. But I don't think we should be despondent about these times. The world is going through difficult times. In 2012, the world output grew by 3.2%. In 2013, it has declined to 2.9%. And in 2014, it is expected to rise to 3.6%. In fact, if you want to see a collection of gloomy faces, all you have to do is attend an IMF meeting or a G20 meeting. Every finance minister there wears a gloomy outlook. In fact, they marvel at our 5% growth, and they envy our 5% growth. China, the champion of growth, had growth rates of 10%. It declined to 7.5%, a reduction of 2.5%. India's growth rate, which averaged 8, has declined to 5.5%. So what has happened is not unusual. It's not unacceptable. It's not acceptable, but it's not unusual. But this will not remain so forever. We can see that the US economy is bouncing back. In Europe, several countries have shown high growth. Japan is making a determined effort to rediscover growth. And if the world economy grows at 3.6% in 2014, India's economy will also see a bounce. Our exports are growing. Electricity production is dramatically improved. The mining sector is showing signs of revival. We have unblocked 99 major projects involving over $60 billion, and these will be implemented now. Foreign money flows are robust. Under the FCNRB window, you have collected $18 billion so far. Foreign direct investment proposals are flowing in, especially in telecommunication, aviation, pharmaceutical. And I think in the second half of this year, you will see the upturn and the full benefit of the upturn, and the movement towards a high growth path will be visible in 2014. In a period of stress, it is important for bankers to hold their nerve. I've repeatedly said that bankers must distinguish between willful defaulters and people who are victims of external circumstances. While we should be stern with willful defaulters, we must hold the hand of those who are victims of external circumstances. This is the period for bankers and customers to work together, to keep faith in each other. Because when we come out of the trough, when the upturn begins, and when we see growth quarter after quarter, that is the time when most banks will become healthy and most balance sheets will become healthy. I'm aware that in a period of stress, decisions are taken, and sometimes these decisions are questioned. I have only recently and in other fora made it clear that banking is a business. And like in any business, the business leader will take decisions based on facts and circumstances available to him or her at that time, and that decision could turn out to be a poor decision or even a wrong decision. But a poor decision or a wrong decision does not mean it is a dishonest decision or a malicious decision. Bankers reset interest rates. Bankers write off loans. Bankers restructure loans. Bankers extend additional credit when it becomes necessary to save a project. Each one of these decisions is based on facts and circumstances that are available to the banker at that time. And these decisions are taken in a structured manner by competent authorities at different levels. Some of these decisions, in retrospect, after a lapse of few years, may turn out to be poor decisions. But if authorities begin to question every decision and attribute a motive and attribute a criminal intent and describe it as a crime, I think that would be the most dangerous decisions that authorities can take. And I would strongly advise that that is not the approach to adopt. No business can survive and no person can take a decision if every decision is questioned as motivated or malicious. As far as government is concerned, I want to assure you, as long as you take decisions based on facts and circumstances available to you at that time, and do it at the appropriate level and in an appropriate committee or an appropriate forum, and exercise your best judgment, we will defend you and we will stand by you. The lifeline of an economy is the financial sector, and banks are the heartbeat of that body. As long as the heart and the heartbeat are healthy, the economy will be healthy. It's absolutely important that banks must be healthy and must perform their role. I'm sure BANCON is a place where all of you come together to exchange ideas, to debate, to reflect, and to come up with new thought, new practices, new models, new ideas. And I'm very happy that you accepted the suggestions that I made last year and introduced these awards for innovation. I compliment all those who have received awards for innovation. Continue to innovate. Continue to improve upon your models. Continue to differentiate between bank and bank, and continue to take decisions which are in the best interest of the bank and the economy. I have great pleasure in inaugurating BANCON and wish your deliberations success.
Speaking once again, talking about, of course, the quality of banking in India and so forth. Let's take a very quick break. We'll come back and take you through some of those highlights.